CEEW and Wilgrow team for your presence, requesting Mr. Tapan and Mr. Gigi to stay back on the stage for the panel discussion. India's green economy can accelerate if rural credit breaks away from business as usual. I would like to invite Ms. Rasha Lala, Associate Vice President, Research and Partnership, Rangde, and Mr. Prashant Manke, CEO, SURE, at the stage. This session will be moderated by Mr. Abhishek Jain. Please scan the QR code to provide your feedback and also share your questions you may have for the panelists during the session. We look forward to an insightful session. I would now like to hand over to Mr. Abhishek to begin the session, please. Thank you.
Great. Good morning, everyone. Thank you for being here. It's great to have a set of eminent people joining us for this conversation. Let me start with, from my far left, Mr. Menon, also probably someone who holds the most amount of experience in this room in terms of looking at financing for the rural India. And of course, you have worn many hats over the years, but the hat that you currently wear, which does represent the MFI sector in the country. So we have seen that DRE livelihoods especially have picked up quite a bit in the last 5 odd years. Before that, they were there in the concept, but not as much on the ground in the field. But now the deployments in the field are growing up. But as we heard from Urva, financing remains one big challenge. Whilst we have seen some of the NBFCs, some of the interesting new age lenders who have come into the play, the engagement of the MFI on the sector has been not as much as one would imagine. What do you think can really help unlock that a lot more, and what is holding it back today? And how can we as a community help get that going?
Thank you, Abhishek, and good morning to all. See, in microfinance, if you see in India, it has been following a set pattern of financing. Over the last 25, 30 years, we have been seeing a set pattern of financing. It's almost a mono product for the MFI companies, MFI institutions, financing through the group mode. So basically what they do is that they form the groups of women into as joint liability groups, and then the loan is given. And it's a very structured product. There is nothing beyond that. A loan officer who goes to the field has to form a small group, look at the credit history of the women members. And if they are eligible for the credit, they can be given a loan based on the cycle in which they are. Maybe the first cycle they will be given 30,000, 40,000 rupees, like that. That is a kind of a set structured product which they have been following, and that still continues. That's a major way of lending it. If you have to go for a DRE product financing, I mean, see, the money which has been given through the group mode can be used for the DRE requirement, but that's a different thing. But if you really look for a DRE kind of a financing, it needs a little more knowledge, technical knowledge for the person who is assessing the credit. So the loan officer who goes there cannot be just an ordinary loan officer like we have at the moment. They need to have some kind of a technical knowledge. They need to have some kind of a motivation, and they need to have some kind of a encouragement to do that. As we were discussing just before this panel, see, whether it is in the MFI sector or whether it is in the banking sector, these kind of initiatives has to come from the top. See, if the top management decides that they need to go for financing DRE as one of their product, they should have a policy of doing that. They should have a SOP of doing that. They should also be encouraging the loan officers at the bottom to do that. Unless that is there, it will be difficult to take it forward. And especially in case of a microfinance institution where I said, The current model is what have been happening for the last 20, 25 years, and people are still happy with that. But there is definitely a change happening, there's no doubt about it, because with the increase in the non-qualified asset ratio to 40%, definitely there will be more of individual financing happening. In such a scenario, definitely they can go for the policy of going for this kind of financing also. But then there are a couple of things which also should be happening. One is that availability of funds. See, right now, funding to MFI itself is a challenge. And if you have to go for a specific kind of a financing on DRE investments, there should be some dedicated funding for that purpose. Secondly, the cost of funding also needs to be moderate, so that the MFIs can also lend it at the level which will be financially viable for the investor also. At the moment, you know that microfinance loans are almost costing the same. It is at 24%, 23%. I think that kind of a financing may not be supportive for the investments which we are talking about. So there are several things which needs to come into play. Then only it can be promoted. For your information, as an SRO and as an association, we have been promoting climate resilient products. And, but then they are all being done on a very anecdotal basis. Not much has happened. With some financing has happened here and there, but it has not come as a mainstream financing. For that, as I said, there has to be a policy at the MFI level. There has to be some supportive mechanism in the form of dedicated funding system also. And also, to that extent, the technical knowledge of the field level people also needs to be scaled up.
Thank you, Mr. Menon. I will circle back to you, but yeah, one important point three important points I think you did make. One, that the technical capacity of the field staff. Hopefully, a toolkit like this can aid and help there. The actual availability of fund for MFIs to actually deploy, so something that need to be solved at a macro level so that there is more funding going there. And the interest rates. I think that sticker shock does remain a big challenge. We have seen that, especially as the asset value goes up, the interest rate starts pinching a lot more. At the lower asset value level, they're still workable. But let me turn to someone who actually provides one of the least interest rate credit in the rural India, Rangde. And it's been a great partnership that we have been having as a program, Powering Livelihoods with Bill Grove, where via Rangde, a lot of these deployments have been financed on the ground. So when it comes to a P2P lender like Rangde, looking at especially lending to the first-time borrowers, what are the things that you actually look at when there is no credit history, no credit score, especially for a loan product, for a new set of technologies where the technology itself is also not having a huge, long track record, so to say? So some reflections there would be great, Rasha.
Thanks for the question, Abhishek. And it's a very important question to ask as well, and it's something that we've tried through multiple iterations to figure out at Rangde as well. I think because of the license that we hold of an NBFC P2P, we have certain leeways that a traditional finance system may not have, right? So for example, how we do our underwriting. Like you mentioned, first-time borrowers may not have a credit score. So how do we use alternative underwriting techniques to kind of understand where they're coming from, what their repayment capabilities could be? So we rely a lot on social capital. And this is basically the borrowers that we're looking at are very often part of SHGs, farmer producer companies, a part of networks like, for example, the Will Grow ecosystem, our partnership with Sure as well. So they do come from some sort of ecosystems where they have built trust over the years. And how do we then capitalize or utilize that trust to be able to give to the borrower, right? So that's one, the social capital that the borrower can utilize. The second would be that for each technology that we onboard for DRE, we look at it as a livelihood economic model. And we study the economic model a lot. And I think the toolkit would be really helpful for us to go deeper into that and, you do it more scientifically. Right now, we look at a couple of estimations and assumptions that we make about the economic model as to how much can they potentially earn through it. And that's also how we look at it, not as an asset that they're buying for self-consumption, but more as a livelihood economic model that they can, earn an income through and gradually increase their dignity. So that's the second one. And the third one would be, then again, what are the enabling conditions, right? So along with the social capital, our impact partners also are working on providing backward and forward linkages to our borrowers. So what are the enabling conditions that are setting up our borrowers for success?
Maybe if you want to tell the audience, like, what is an impact partner? Because not everyone will understand.
Sure, I can elaborate on that. Just a brief introduction about Rangde maybe would be helpful. So Rangde is an NBFC P2P where we do peer-to-peer lending for our borrowers in multiple sectors, but I'll focus on the DRE sector for now. So we work with our borrowers not directly, but through impact partners, right? So impact partners could be on-ground organizations, NGOs, social enterprises, who are basically a touch point between us and the borrowers. For the DRE scenario sector, we have a couple of impact partners. One of the most significant partnerships is with CEW and Will Grow for the Powering Livelihoods initiative, under which Shore, again, is an impact partner with us. The Shore community who is looking to buy DREs can, come through Shore to Rangde to avail a loan. So that's an impact partner at large, but happy to pick it up, off the stage later as well. So those three, and then the last one being the setting up the borrower for success, and how do we ensure that our impact partners and our ecosystem partners are enabling those conditions for the borrowers. So that's how we do our borrower identification.
Great. And from there, I now move on to Tapanji, discussing how NABARD, which is, again, the largest financing institute when it comes to rural India, and NABARD has been championing quite a lot of different climate causes, right? To the extent that there is a dedicated department on climate change within the institution. And right from helping the farmers in terms of building their climate resilience, there are a few programs that you run there, but to also do value addition, which is more climate friendly. And this is where a lot of these DRE livelihood products come in, right? In that context, one thing which we have seen is like a lot of the bankers at the first mile, whether it is typical commercial banks, whether it is RRBs, are not yet even familiar and aware about these solutions, right? How do we leverage like NABARD's network to bring about that sensitization? And then that sensitization potentially may need to be complemented with something like a toolkit like this, which makes the actual disbursement happen. Like knowing first of all about the product and then knowing how to evaluate it. What do you think could be NABARD's role and how can we likely work together on making this happen?
Thank you. Thank you so much, Abhishek ji. And good morning to all of you. And I will especially thank CW for inviting me to this panel discussion. And it is an honor for me to share this desk with my earlier CGM, Gigi Menon ji. Rightly, my previous speaker, Menon ji, pointed out about the scaling of these technologies in the MFI sector. So here I will just focus on the RFIs, particularly the regional rural banks and the DCCBs. If you will take these solutions to the ultimate users, maybe the farmers or the micro entrepreneurs or the SHG members, the scale will happen only these mainstream bankers come into the forefront. Because they have a great outreach and almost every women member or a farmer, they may be a member of the SHG or member of the DCCB cooperative societies or a farmer producer group. So to make these happen, to make these scales happen, we need to sensitize these bankers. If we really analyze the level of issues, particularly these bankers are mostly conversant with the regular financing. whether it is KCC or the SCG financing. Because at one point of time, for them, SCG financing, they're struggling with the SCG financing or the KCC financing. We have seen when we joined in a commercial bank in 2003, they're getting the target of SCG financing. And at that point of time, getting the documentation right, what are the documents need to be required, how the SCG loans to be evaluated, they're really struggling at that point of time, the field level officers. And over a period of time, it has been so streamlined, whether it is a KCC or these products, they're become very familiar with themselves. So, like when joined as a field officer in a commercial bank, how to evaluate a KCC, how to evaluate the calculation of the cash credit if a particular farmer is having 1 acre of land, having paddy cultivation. These technical know-hows, it has to be embedded into the branch managers, all the field level officers. Now, similar will be the case of these DRE technologies. If this can be standardized, like your toolkit will, to a certain extent, will help in the standardization of this product, will help these branch managers or the frontline managers to understand the product, so that, because there should be a supply as well as demand driven. It cannot be only supply. Whenever a farmer or anybody is coming, the branch manager should be in a position to sell the product or evaluate the product. And rightly, I'll give one example. These solar power cold storages or the solar dryers, particularly before this I was working in Telangana. So there is a sweet lime belt and there is a forward market linkages of the solar powered lemons to the Gulf countries. And these producer groups who are bankers prefer in case of individual loans to the group loan, because it reduces a lot of cost, a lot of transaction cost, a lot of documentation, and they're seeing the forward market linkages so that income is flowing. So then they will be able to help the processing of the loan. So in order to mainstream these loans, as before we just discussed, these whether it is a documentation process or the policy level process, it has to be come from the thrust from the top. Now with the amalgamation of these RFIs, particularly the RRBs, one state, one RRB, now they have the lot of risk-taking capacity, a lot of capital is available. But in order to standardize, to push through the product, we may sensitize the top officials so that it can be embedded into the policy. Then at the grassroots level, maybe every district we have district development managers who is leading from the front, having more or less contact with the departmental officials where loan can be originated, like from the agriculture department, or a lot of contact with the bankers. So at the district level, the sensitization can happen. And maybe some of these banks, they have the loan origination system. How this solution can be integrated into their system so that seamlessly it can integrate, and the bankers, and the ease of accessing that and ease of operating that system will definitely have the great say in application or processing of this application. Yeah.
Great. Thank you, Tapanji. And I think we'd love to work with you on some of those ideas that you mentioned, whether it is how do we integrate this with the loan origination system, as well as for the sensitization at the district development level, district development managers level. I think it'll be very, very useful to sort of leverage NABARD's on the ground reach to sort of take these sensitization products, take these evaluation toolkits to the ground. Now, let me move to Prashant. Prashant is the odd one out here in terms of not a lender of wearing a lending hat himself, but someone who sees it from the other side, right? From the need perspective of the community, that when the community is trying to adopt climate-friendly solutions, including DRE solutions, what are the challenges do they face in accessing a loan product, in accessing financing? So Prashant, maybe if you want to come in and share just that first one, raw experience on that front.
Thanks, Abhishek. Thanks, CW and Will Grow for inviting me here. I'll just couple of minutes to explain what we do primarily. We are an enterprise, which is social enterprise called Sakhi Unique Resource Enterprise. We work with rural women. Every village, where we work, there'll be one woman whom we call Sakhi. She is our resource out there. And she promotes climate products. She promotes all impact products. We support sustainable agriculture. We promote climate. We promote health and nutrition. And in the bargain, she is able to earn. So that's her livelihood. And these women typically come from SHG or they are farmers themselves. So they have some credibility and trust in the village. And that's the model which is proven over the last 16 years. Now we are, of course, in an expansion mode. So having worked, being on board for Powering Livelihood, we are promoting the DRE products, where the first barrier is obviously, price, because all the products are, in my opinion, there is scope for improving the price. And the second barrier is interest. So when you go to a local bank, nationalized bank, or district cooperative bank, DRE is not on the priority list. Simply speaking, they need to be explained what DRE means. Why is somebody buying a solar dryer, or what is a hydroponic unit which is solar powered? So that becomes a big challenge. And then other financial service providers, interest rates are pretty higher. So the issue is like, you are on one side, you're facing a little, challenge on pricing because adoption rate is slower because of those prices. And typically the ticket size, let me tell you, the solar-based sprayers range from 20,000 to the highest model is around 85,000. The hydroponic unit, 20 to 40 or 48,000. Those are the ones which are fast moving. Solar dryer is much higher, which is almost around, 80K. Solar refrigerator is around 1 to 1.9 lakh. So when it comes to the fast moving, the small, ticket, I would say 20 to 40K, the challenge is, again, you may not really be, entertained. Those who are willing to provide, the rates are higher. And CIBIL is a big challenge. It's not an easy thing because CIBIL is not there, or CIBIL is there but not good. What do you do? Because CIBIL is again linked to family. CIBIL is linked to some past loan by, if you are guarantor for somebody. So that becomes a challenge. So is there a way to deal with it? Is something which we always, look for. How do you de-link an individual and not a family necessarily? And like Rasha mentioned, social capital is very important. We are willing to pitch in there. And that's what we are working with Rangde on that, a few cases. But I'm sure we can ramp it up. Yeah, thanks.
Thanks, Prashant. I'll come back to you, but maybe actually going back to Rasha quickly. I think one other thing that we often see is that it takes a lot of time for loan products to be developed in the financial institutions. And two, they often get developed assuming that the context is same everywhere, but that is not the case, right? And especially with some of these DRE products, you can use them on very many different commodities. Like the same solar dryer can be used for drying flowers. It can be used for drying tomatoes or a mango, right? And the viability would be completely different and so on. So when it comes to this matching between the tenure and the interest rates for a product in the context that it start making sense, that the EMI start making sense for the end user, how does Rangde go about it, and what do you think could be maybe some lessons for other financial institutions to take inspiration from?
Thanks, Abhishek, for that question. So the conditions under which we operate, right, our interest rates are fixed. So it's 8 to 8.5%. That is pretty much the standard. How we do the product market fit, if I may say, is again we rely a lot on our partners on ground to advise us on what works for the borrowers, right? So very often we look at the cash flow of the borrowing community or the borrower who the end borrower would be, and then we work back from that. So for example, if say a woman farmer was to earn 10,000 rupees per month from a particular equipment, what kind of loan product would it be that would better suit her needs with that interest rate and with that tenure? And maybe we should not give more than that, right? So that is what we look at. Those are the conditions that we operate within. At the same time, we also look at how can we restructure repayments. Instead of doing it as a monthly EMI, can we give them a moratorium and start collecting once they start making some money out of the product? So these are some of the ways that we are quite flexible and we're able to do it because of the guidelines you operate within. So we have that flexibility. That being said, it is a challenge that we face very often, that sometimes the income does not always match the repayment that the loan product would require. In those situations, we also remember that this is very often a supplementing income for the borrower. They very often have other sources of income, especially rural women who have agriculture as a fallback. They may also have another smaller kirana store somewhere near their house. It might be a tailoring unit. So we try and accumulate all that information and look at what are the other sources of income that the household is getting, and how do we then kind of make this make sense for the end borrower eventually.
Yeah, no, I think a couple of points that are important which you brought in, like the flexibility in also the repayment structuring, which of course maybe you as a P2P NBFC gets a little bit more flexibility than some of the mainstream financing institutions. But there I think there is a lesson for the policymakers and regulators, like what kind of flex can we bring in for some categories without creating a moral hazard in terms of, again, non-payment risk and so on. But I think that we have often seen, like, because of some of the cyclical natures of the produce, at times the value addition that is happening, there is a need for that flexibility to come in. And maybe just a quick follow-up, like, can you tailor-made the, let's say your loan product for the same asset? Let's say it's a solar dryer. Can you tailor-made the loan product for each context, or is that too much to ask in terms of structuring it?
So we do that, and I think it is possible up to a certain scale, right? We do take estimates, and we have an economic model that probably fits a certain number of people. I think that would be a challenge going to when you scale from a certain scale to a much larger number. And to say that maybe within the same geography, within the same economic model, it might make sense. But as the geographies shift, we may need to reevaluate and replug the numbers into the model and see what makes sense.
Yeah. Because there's one thing I think we have often heard from NBFCs and other financials, that it takes them a lot of time to come up with a loan product. And they often are looking at a very, very standardized return expectation across the context. And it also works in many cases, like if it is a two-wheeler loan product, the return is a lot more structured than compared to some of these value addition solutions, which are very, very context specific, right? But let me go back to, actually, Tapan first, and then maybe Mr. Menon. Tapanji, like, one of the vehicle that we have seen, and do correct us, is the model bankable project that NABARD comes out with, which are a great vehicle to sort of sensitize bankers what are the new things that they can look into financing. Do you see that there is a case for building model bankable projects for DRE? Would that be a way to sort of sensitize? Or what could be other ways in which this can happen?
Thank you. So, if you'll see, after forming this Department of Climate and Action and Sustainability, we have a great focus on these clean technologies. And we have a technical support unit which supports us. And we have also demonstrated through our intervention, like solar as a third crop for the farmers as a pilot project. And solar rooftop loans bundled with home loans for the RFI sector and some sort of interest subvention we can give in that to make the product more affordable. And from our experience, what I've seen, if we'll give them, because NABARD earlier has a lot of model bankable schemes which help the bankers to go ahead with the loaning of those products. Along with, we are giving the unit cost to them to give them some standardization of the investment activities. So by helping the bankers, these model schemes on the unit cost, it will help the frontline bankers to assess the project viability, whether the cash flow or the return from the investment. And we are integrating these clean technologies model schemes with our climate training materials. We have developed around 12 climate training materials for those RFIs, for any bankers, even if the other stakeholders like the agriculture department or the state government or the line departments. These will be very interactive. So these are the steps which are taking to sensitize the bankers, and these model schemes will help them to give an informed decision, or they will be able to know. So there are some schemes like solar rooftop, they say solar as third crop. So even if some of these DRE technologies will be able to help model them as the model bankable schemes, which can be even in today's technology, it can be disseminated at large using those digital platforms. And it will help these technologies, financing of these technologies at scale. And even if we have promoted more than 7,000 to 8,000 FPOs, and to get the aggregation model, because for a banker, financing, as I have earlier told, financing group as a whole, they can reach the scale. And to get, even if here we are providing the interest subvention, even if some of the risk sharing mechanism can be provided to manage the risk. So we are now talking with some of the NDVs to create a risk sharing facility, which can be utilized for financing these type of clean technologies, and the risk can be shared from these funds. So this integrated approach, whether it is a risk-sharing mechanism, model bankable schemes, or sensitizing the bankers, or the interest subvention, so these all together will help the sectors to grow. And ultimately, these technologies will, because ultimately this technology is the technology are the, because it will help not only the farmers, it will help the environment ecosystem as a whole. So to push these technologies, to push all these ecosystems needs to work together. So we are working on that, and definitely it will go at scale when all these financial institutions, mainstream bankers, MFIs, NBFCs, commercial banks, RFIs will come together.
Great. No, I think it's great to learn that what all NABARD is already doing, and then how do we integrate these new DRE solutions also into the same approach. Actually, I'll go to Prashant quickly before moving to Mr. Menon. You did talk about, Tapanji, that there is this risk mitigation instruments in some ways that, let's say it could be in trust subvention, etc. But I think there is a big part of the risk mitigation which is ensuring that you are working with the community to get the income going so that the repayments are happening, right? Like what all needs to happen once the adoption of a livelihood solution has happened. And that's where, again, I think role for someone like Assure becomes very critical, because you have the boot on the ground, right? So Prashant, from your perspective, like what are those non-financial interventions that are needed to make the financing work, right? And how can an organization like Sure can likely partner with many of the financiers to make that these loans are very high likelihood of repayment, very low NPAs and so on? Maybe if you want to reflect.
Tough one. but I'll try and answer. So, in the current scenario, there are a few products where there will be some, income stream, and then, predictability will come into play, like a hydroponic unit. So we're working on that. So we have seen it picking up for own consumption, and now we are pushing it for more for the livelihood purpose. Dryer is the similar case. So what we can do to sort of enable financial, service providers is probably bring in some operational efficiency, because these are remote places, not easy to reach. And if somebody is defaulting, you never know why somebody is defaulting. Or even to figure out that whether, is it a good case to go ahead. We can come into play because our resource, this lady is in the village. And that's where, we can play a role. We also have discussed with some of them in terms of nudging them in case there is a default, Because the thing which we feel we cannot do is collections. Because we will be totally off our, focus. But in any other way we can help, in terms of assessing, the credit worthiness. We would be happy to do that, because end of the day, when we promote this clean tech, that's where the financing is required. That's where the customers come into play, for the enterprise as well as the financial service providers. So our network is available. We still don't know what more can be done, But what we bring to the table is, we know, the person in the village who is seeking loan. Okay, we know how to sort of, deal with that person in case of, a default to an extent where we nudge them. And we can build some credibility into it. We are willing to lend our social capital, leverage that to ensure that, the scale-up happens. That's possibly what we can do. Yeah.
And I think also the fact that training the users to make sure that they are making most out of the product, and all of that is also an important role that entities like Sure do play on the ground, right?
Yeah, I think, it first starts with why this product. That's where a lot of effort goes in terms of sensitizing them, building awareness and then generating demand. And that's a slow process. And that's where, honestly, Powering Livelihood helps a lot in terms of, funding those efforts. Because no enterprise is currently able to fund it themselves, right? And for us, being a go-to-market channel, that's where, the link happens. So, a couple of things which we have done, if you allow me maybe a few more minutes. And it's, we are creating demo champion, the program where this woman become own, she's a customer as well as she demonstrates this technology to others. That's one part which is working well. And that too, again, there is a certain discounting of the product which is happening thanks to, the program. The second is we are creating experience centers. Again, there's a funding from the program for that, where you demonstrate the technology which is in use and ensure that farmers are exposed to it. Okay, so these two things are helping us a lot in terms of creating awareness, building confidence, and moving into this DRE space. Yeah.
Thanks, Prashant. The reason why I was holding on to come to Mr. Menon to you was because I wanted to ask you a slightly more macro question. Given the long and rich experience that you bring to the table, I want to ask you, if we were to really scale financing for these solutions and see the adoption of these solutions at scale, maybe not just from Sadhan's hat, but from your overall experience, what do you think, those couple of top-down things that we need to do? You did indicate the top-down. Whether it needs to happen at NABARD level, whether it needs to happen with the RBI in terms of another priority sector lending, what do you think could be those signals which can really help push the financing in a big way for the sector?
Right. See, as I said, it's a priority. It's a priority for the not only the country, for the world as a whole, to go into the green financing, go into the climate resilient activities. So there has to be, I know government must be having some kind of programs and policies for the climate resilient activities. But then that needs to become a little more stronger, and more emphasis has to be given on that by the lenders as well. As an institution like NABARD, where I was also associated with it for the last almost 37 years, I know they have definitely an edge in supporting these kind of activities. And now, as Tapan said, that there is a separate department itself has been created for that purpose. So a lot of things can be done. Like he's talked about the preparing the model schemes or coming with the unit cost. These are things which will help in the bankers to go for the financing, because it's difficult for a branch manager sitting at the branch to assess the viability and feasibility of every investment, because he has a lot of things to do, and if it comes to his level, and he may not have that kind of a know-how, knowledge also to do these kind of appraisals and assessment and all. So that's why this kind of unit cost and scale of finance or the model schemes works well. So more can be done from NABARD to push this by bringing these kind of things. And third, as I said, the funding is a major aspect in this regard. So funding has to be there. So some kind of a blended finance, if we can bring in by blending with some kind of grants available at from the government side, or even I would suggest that even some of the CSR funding which the companies are supposed to be doing, they can also be used for blending these finances, so that the cost becomes much easier and much better for the borrower. And these investments definitely has to be, at least in the initial stages, has to be pushed through by bringing some kind of subventions, blended finance, some kind of cost, lesser cost financing. So these are things probably one can do, and as I said, everything has to be from the top down only. Otherwise, it becomes difficult.
Great. And on that note, we'll have to close the session. I've been constantly getting nudges from the organizers. But I think clearly there is a role for many of us to come together. How can we work with NABARD? How can we work with Sadhan to ensure that the convening and the reach of each of these institutions can be leveraged with the complementary abilities of someone like Prashant on the ground and many others like him who can support that first mile linkage, origination of demand for these solutions, being there on the ground as the solutions get adopted. And of course, I think until then, the role for Rangde remains pretty significant because of the flexibility that you are able to provide until the, so to say, the large-scale institutions come into play. Because you are in a way helping build all that track record which they can leverage in terms of this is the income history, this is the credit history, this is the experience of the products on the ground. So yeah, so on that note,
one more point from my side. Actually, as an association or an SRO like Sadhan, we can also definitely, and we had been doing a bit of it, but we can do a lot more, building the ecosystem, and especially I mean, throughout policy advocacy measures, you know, working with the government, working with the regulators, and working with the funders. Probably a bigger role can also be there for the institutions like Sadhan.
Yeah. No, certainly. I think we'll love to, as I said, see how can we all come together and work on this to make this happen. Great. On that note, let me thank you all for your attention. Sorry we couldn't take any questions from you all. If the organizers allow, maybe I can, but it's really up to you. Okay, we can take a couple of questions in case there are any in the room. Okay, I think we are good. Great. Thank you.
Thank you, panelists, for such a thoughtful discussion. This session helped knowledge exchange and highlighted the need for context and innovation financing approaches in the sector. I would now request my team to hand over the Access Speakers kit and request Mr. Abhishek to give Power Livelihood kit bags. Requesting the panelists to come forward on the stage, please. Thanks. Please visit Power Livelihood Kiosk number 10 to know more about the toolkit.